Take a look at this headline from the Wall Street Journal. White House is confident it has an edge over China in the trade dispute. Joining us now, Kevin Hassett, chair of the White House Council of Economic Advisers. Kevin, your point all along has been that our economy is so strong that it can withstand the tariffs between China and the United States. That is your point. That's your reason why we stay with a hard line from President Trump. That's it?
Well, I think that President Trump has made it clear, going all the way back to the election, as you covered very often on your show, that we got really shafted by previous trade deals, and especially by China. You know, the Council of Economic Advisers, which I chair, we studied it and concluded that in the most recent year we have data that Chinese had stolen more than $100 billion worth of our intellectual property. And the U.S. Trade Representative, Bob Lighthizer, actually came in with a much lower number. He said the theft he thought conservatively estimated was $50 billion. And so in retaliation, the president, in order to get them to stop stealing our stuff, put $50 billion of tariffs on Chinese products. But the point is they should have at that point said, okay, we're even, now let's negotiate. But instead they retaliated, and the president's upped the ante. And the fact is that in that kind of a tit-for-tat game with China, we do have the upper hand.
Well, Kevin, we always talk about the tariffs from one side or the other. The objective is to get them to stop stealing our intellectual property. Give us some news on that. Have they agreed to anything to stop stealing our intellectual property?
Well, our hope that this has a happy end, and I think another headline in the Wall Street Journal that shows how effective the president's negotiating tactics are is that you might have seen that the European automakers have said that, yes, President Trump's vision of a reciprocal world is a vision that we think is a better world, and they've basically advised the EU to take off all tariffs on U.S. automobiles sold in Europe. As you know, those are 10% right now. And so President Trump, he wrote the art of the deal. His job is to make the world a better place, and he's in a hurry to do that. You know, he's not going to wait until the WTO 5 years from now fixes it. And so he's taking very strong measures to try to get leverage in the negotiations, and we're starting to see that leverage pay off.
Am I right in saying that at this moment it's threats from both sides? President Trump has threatened 10% tariffs on $200 billion worth of Chinese products coming here, and China has threatened to impose reciprocal tariffs of their own, or some measures of their own. At the moment, it's threats. That's it, right?
There are some things that are in place and some things that have been threatened to be done in the future that will take a process where we have to go through a comment period and so on. But the president is very serious that he wants to make the deals better for American workers. And by the way, you had, in the beginning, you had mentioned a whole bunch of good economic data news. There was another piece of news today that isn't usually covered that much, but was incredible, which is more than $300 billion was repatriated in the first quarter this year by U.S. firms because they're finally allowed to bring that money home and use it to create jobs in the U.S. So it was the biggest repatriation on record was the first quarter of this year. $300 billion came back
now,
to help create jobs in America.
Is that because mainly the big tech companies, they've got a ton of money overseas, and the new tax law made them bring it back, albeit at a lower tax rate? Is that this $300 billion? I think Apple came back with over 30 or 40 billion.
Yeah, that's part of it. But don't forget, it was everybody. And the reason why there were no manufacturing jobs and capital formation was actually negative in 2016, the year before President Trump came in office, it was that everybody was investing abroad. Foreign direct investment in the same quarter dropped more than $400 billion. And so U.S. firms that used to build their factories overseas in order to avoid U.S. tax, they stopped in their tracks because of the tax bill. They're bringing all the money home. And you wonder why the economic data looks so good. It's because we fixed that really stupid thing. And of course, you know, that's given us a very strong economy. You mentioned the data. And of course, there's some uncertainty right now about how these trade negotiations are going to work out. Okay. But the fact is that the Europeans now admit that the president's vision is a better vision than the one that he inherited. And our hope is that this will all work out well in the end.
Some in Europe.
Well, the automakers, it's a big part of our trade deficit.
Yes,
the
they
automakers.
are indeed. Kevin Hassett, thanks for joining us, sir.
Thanks for having me.
Always a pleasure. Thank you very much indeed.